I think one of the real interesting parts is when you apply this to crypto, it's going to turn into an agent-based kind of conversation. And it's not going to be like, oh, answer this question for me, like hit, point, shoot, give me the answer. It's going to be like, go do this stuff for me constantly. And, I've got agents running who are helping me with my itinerary, helping me with my calendar, helping me with my signing up for flights on time. Like all of that is going to be kind of the new narrative. And, giving it capital to be able to go off and do these things, make decisions on your behalf, giving it, whatever mandate it needs to have. I think that's going to be what this next kind of iteration of AI is going to be.
All right, everyone, this is a message for my DGen listeners out there. If you are getting scalped, paying expensive fees to perp dexes, I highly recommend that you check out Index Co-op's new leverage suite. Now, whenever it comes to leverage, do your own research. This is not financial advice. Don't bet more than you can lose, all that good stuff. But if you are going to lever up, you might as well not pay an arm and a leg for it. You can get leverage on BTC and ETH with built-in liquidation perfection, now available on Base, Mainnet, and Arbitrum. So click the link in the bottom of the show notes and head over and check them out today, and you'll hear more from them later in the program. Hey everyone, this episode is brought to you by Supra, the vertically integrated L1 for super dApps. They have a very cool new product coming out called Supra Containers. So head over to supra.com. That's supra.com/containers. So if you're building on an L1 and it feels a little bit crowded, or the complexity of L2 and L3s are getting you down, just head over to Supra. They'll get you sorted. Thank me later. Hey everyone, this episode is brought to you by Fuel Labs, who's launching Fuel Ignition, a new high-performance Ethereum L2 powered by the Fuel VM. Now you're going to be hearing all about Ignition later in the program, but for now, what you need to know is they are launching phase 2 of their points program. So click the link at the bottom of the show notes and head over, start experimenting, messing around on Fuel today. Thank me later.
All right, everyone. Welcome back to another episode of Bell Curve. Before we jump in, quick disclaimer. The views expressed by my co-host today are their personal views, and they do not represent the views of any organization with which the co-hosts are associated with. Nothing in the episode is construed or relied upon as financial, technical, tax, legal, or other advice. You know the deal. Now, let's jump into the episode.
All right, everyone. Welcome back to another Roundup edition of Bell Curve. You got Michael's 1 and 2, Vance. How you fellas doing?
Doing well. This is just a Vance and Mike episode, so You'll see this one out. Doing well. Trying to think of what is going on. Framework will have probably a couple announcements, next year that we're looking forward to making, and I think we're
sooner than next year as well.
Yeah, no, it'll probably be out by the time, I guess probably a little after people hear this podcast, but it feels like we're finding pretty interesting stuff at the intersection of things like energy and things like daylight with crypto. And we were actually at a hacker house in Russian Hill, which is related to kind of the announcement that'll come out. But it's interesting with San Francisco, back in the day, there was all this people living communally and biohackers and, Soylent Bros and,
Crypto Castle and
Crypto Castle. Right. And it's funny.
Crypto Castle. That was, there were some
Jay Gardner.
Jerry Gardner, that's right.
You had Augur started there and all that stuff, and that kind of went away for 3 or 4 years. But we went to this hacker house I think a few days ago, and it's a bunch of grungy devs living in a $15 million house in Russian Hill, and it's everyone's super dedicated and knows exactly what they're building, and is there's some idealism to it, which is you kind of need that. But the vibe of that house has kind of I think it's a defining factor in terms of San Francisco coming back, and a lot of the sharpest devs in the world building things oftentimes for the second time in crypto, where now it's they're I had my first rodeo. I built some infrastructure that probably didn't take off, get a ton of adoption. But now it's I've got a use case, I've got a new market, and I've got a real reason to use crypto. So I think that was, we spent a bunch of hours there a few days ago, and it was just, that's what you play for in crypto. It's just it reinvigorates you in terms of, okay, this is why we do it.
That's awesome. Speaking of castles, did I tell you guys I was staying in a castle in Scotland this last weekend?
I was gonna ask how the trip went.
Dude, it was great. It was awesome. We went with some of the. I know you guys are fans of the chefs, the steakhouse crew. We had a motley crew. We had some folks from Morpho, Spark. It was a great crew. Formed a DAO called Excellence DAO.
Scotland?
Huh? Scotland. Yeah.
Why?
Yeah. I don't know. Yeah, it was a golf weekend. So I got to play yeah, dude. Yeah. It was it was a spontaneous decision to do this, but it was a lot of fun. We'll run it back maybe around ETH Denver, something like that. But it's a good crew. We have to get you guys on the next trip, newest members of Excellence DAO.
My golf game is tenuous. I can either hit it really well or you need to escort me off the course because I can't even make contact. I don't know what separates one from the other, but
I've seen Vance play better golf without shoes on than with shoes on.
Yeah.
What was the background to the no shoes golf? Feels like there's a story.
You're in Hawaii, just playing.
Hawaii, 9-hole Friday afternoon. Rules: no shoes or flip flops. That's all you get.
That's awesome.
Tiger Woods out there, and then I get in a golf simulator. I can't even hit the ball. It's just
yeah, I've got a golf simulator in my garage, and we had some sessions.
I was like, I'm done with this. Fuck it.
What about would it change your mind if it was a skiing offsite instead of a golf?
Yeah. I can rip it up on the slope, so I'm always good for that. But winter is coming pretty soon here, and so is the election. 11 days.
11 days, yeah. In two roundups, we're going to be through this thing. We've actually got
that's wishful thinking.
I'm measuring time in roundups here, yeah. But what do you guys think? We were actually just talking a little bit before we got on some of the newest polls that came out. Michael, you were kind of giving us what's the latest in terms of what the polls are saying here?
I mean, the quick and dirty is some of the last polls. So the way it works is you've got the major publications, CNN, Forbes, Wall Street Journal. They all have their kind of polling cadence. And around this time is usually when they come out with their last poll of the session. Maybe another week, sometime next week, we'll get the final polls from everybody else. Others like Rasmussen do kind of a daily trend. And so you're going to see a lot of polls kind of coming through, but the big ones like the CNNs and the Wall Street Journals are these are the final ones that they do. And at least Wall Street Journal came out last night, and that was plus 2 or plus 3 for Trump on the national basis. And then you've also got CNN that came through this morning. Head to head, it was even 48-48, but with the full field, it was plus 1 to Trump. And I mean, just as a comparison, CNN, the final poll that they had before the election in 2020 was plus 12 for Biden. Mm-hmm. And ultimately, Biden won the popular vote by 4.5%. So, you assume a 6 or 7%, margin of error, expected error from that type of a poll. So if you take the data on the face and compare it to the last two election cycles, it's pretty clear the direction. I think the Trump campaign has made a huge shift in that direction in the last month. And that's what you kind of want to see is momentum going in is usually the defining characteristic. And the other thing that I think, if you really are following this, there's a couple of Axios articles about, fear amongst the ranks of the Harris campaign. There's sort of infighting and blame game. But then you also have, the publications like the LA Times and the Washington Post both came out in the last couple of days. Washington Post today said that they are not endorsing a candidate for president. I think the narrative here is I think a lot of the publications are recognizing kind of the direction of where things are going to go with this election. And for them to be able to save face is ultimately the only thing at this point that can save their businesses. Because if you kind of pre-mortem the election results as we're talking about, and you say, okay, well, what's the defining characteristic? Why was it so wrong? It's the gaslighting of the mainstream media that is just so transparent and obvious for anyone who's paying attention, and people don't like it. People don't want it. And I think they're going to have to really look internal and kind of figure things out. I think we talked about it maybe a couple episodes ago, but CBS is really under fire because they haven't released a transcript of the 60 Minutes interview with Kamala Harris. They had we're not going to fact check in the last debate, but then they fact checked anyways, and then they lost the fast. There's just been, mistake after mistake, and bias is really shining through. And so I think people are losing trust in mainstream media. Even Jason Calacanis posted something on Twitter where he's like, the trust that people have in mainstream media is at an all-time low over the last 40 years, which goes to show, the evisceration of their business model alongside it. So it's going to be interesting. I think some of these publications are sort of hedging and just not picking a side, as like a last ditch. Hey, we're going to stay out of this. Like, don't kill us. And even Nate Silver with his, and I follow his blog, he's kind of couching things as well, because I think for anyone to regain any sort of trust with their readership or viewership or whatever it is, you can't be headstrong in one direction and bullheaded thinking that she's going to crush Trump and then have the opposite happen. You can't.
I pay $15 a month for him to tell me it's a toss-up race, so it's really valuable stuff.
Haven't you've seen that chart that just like it's the intersecting lines? It's like this chart has told me nothing. Like,
I mean, I'm sure that will be one of my many Substack subscriptions that I forget about and end up paying for the next.
I was going to say, how long are you going to keep doing that?
Dude, there's Substacks on those that I haven't read in legitimately years, but I think our perspective is 2025 is going to be very bullish. You're going to have Trump win. You probably have that knee-jerk reaction where just like things start to moon, kind of across all asset classes, but especially the ones that are identified as the Trump trades. You rally through Thanksgiving, you rally through Christmas. It's kind of one of those years where it's like you're talking to your family about how great crypto is versus the opposite. And then in Q1, I think it's kind of like, all right, he gets inaugurated on January 20th. And that's when it all starts to happen. Starts cutting rates, starts putting regulations into place. The Senate and the House come back and start to actually legislate. So I think 2025 is going to be very broadly bullish, but especially for crypto. Like there is no industry that needs this more than crypto at the moment. And it's good that it seems to be going his way. But just bullish.
The gaslighting stuff really resonates with me. Who else does this in a way which I really don't appreciate is like the Liz Warren stuff about corporate greed. It's so offensive to your intellect. It's so offensive. Here, I don't know if you guys saw this. This Mika Hunkasala put out a great tweet on this. Here, let me see. I don't know if you guys can see this, but it's like, the post-war greed spikes and the good old days when companies were generous and when companies got greedy in the 70s or the long generosity of the 80s and 90s. Like, obviously it's not the companies getting greedy. Like companies are always greedy. Something just changed in the environment, which allowed them, to raise prices in this way that's really negative for society. It's just, I don't know. I interpret it the same way. I just think that there's a really willful misinterpretation of on the ground facts in a way that is losing people, because I would count myself in the group of people where I don't want to be one of these like fringe people being like, you can't trust the media, but then it's like, you got to believe what your eyes are telling you at a certain point, that I'm not being fed, best, truthful information. Basically.
They're not your friend. They're not. Let's talk crypto stuff. Let's talk Maker first.
All right. Let's talk. I was gonna say there's some right curve stuff on crypto this week, and then there's some hardcore left curve stuff too. So,
I guess we're starting with the right curve with Maker.
Yeah.
For people who don't know, Maker rebranded to Sky, or attempted to. We'll get to the point of this, but part of this is launching these sub DAOs that they have, which are kind of like these sub organizations with their own tokens. Part of this is launching L2 and Solana support. Like it's kind of just like this overall growth initiative for Maker to keep growing their DAI supply. And, they transitioned to Sky, and effectively Sky just didn't take. Exchanges, which increasingly hold the keys to the kingdom, didn't list Sky except for a few. People didn't migrate their Maker either. But as part of this, what did happen is that, DAI supply and USDS, which is kind of their USDC competitor, that Maker has started to grow, and DAI supply is about like 6 billion right now, which is like a 2-year high, and continuing to drift upwards because of these rewards. But effectively didn't take, and it kind of reminded me of this moment at Netflix where I used to work, where they tried to separate the DVD business and the streaming business into two separate businesses.
What was that called?
Quickster.
Quickster.
I remember that too. Yeah.
And Reed is like super, just call it like bullheaded, not unlike Rune, but I think in the right context. And he was basically like, I'm not going back, I'm not apologizing, I'm not doing anything. And then this one comms lady who wrote the Netflix HR manual was like, you have to apologize, you have to reset this. And there's this famous video of Reed in a fishing shirt, which is like so strange when he chose to wear that, on YouTube, saying, look, I fucked up, I messed up, the service is growing, fundamentals are positive, but on the day that he announced Quickster, the stock dropped 32%, 33%. And so I think this is kind of that moment for Maker where it's like, look, the fundamentals of the business are growing, things are looking pretty good, there's a path to higher DAI supply and more revenue and more buybacks, but we just confused the shit out of people with this Maker and Sky rebrand. And so we had a bunch of discussions this week with the Maker team and the Maker community. It seems like the feedback has been taken. They're pushing through a proposal to keep the brand as Maker. They will still redenominate it 24,001, so Maker will be like $1. But I think the miss here was like misunderstanding the brand equity of Maker itself. And the good parts are that it's growing, and USDS seems to be attracting a differentiated user of DAI and USDS. But it was, I think, an audacious plan, one that parts of it are working, but listening to the community and dialing things back, I don't think is a bad idea after all. And token price is what it is, but like what we're playing for at the end of the day is just like the fundamentals are getting better.
And just to like double click into this, I think that there were 6, maybe 7 kind of fundamental changes that were going on simultaneously. And I think 5 or 6 of them have worked really, really well. One of them has not, which was the shift from Maker to Sky. And trying to do many things at once is never an easy thing to do. Especially when it's in crypto and there's a lot of noise. But there's just, constraints, and people are, used to Maker. They like Maker. Changing both DAI and Maker brands simultaneously, software upgrade, moving into the Star and Sky ecosystem concept of, the sub DAOs in the parlance of Endgame. There's a lot of just things that are changing, and your mental model of how this stuff works. What is this Sky thing? And so I think that, hats off for trying it, but I think also hats off for recognizing that it wasn't headed in the right direction, and there's a new path forward. And this is why decentralization is powerful, because you can see things in real time. You can react to the community response. You can hop on a Twitter Spaces or a community call and like get feedback, and then there's a vote. And this can happen all in the span of like weeks, not like years. And so, yeah, it was pretty cool to see that in action. But I think, calling it out is like doing too much is never a good thing. But doing, not enough is also not the right thing. It's hard to know what the right call is beforehand, but, being able to accept, things not working and move back or change pace is good.
It's also kind of like, you look at the valuation of Maker relative to its peers. It's trading at like 1/3 Athena, and it has like, I think 2 or 3x as much revenue and earnings. Ondo, it's like 1/7, and it has like, 100x more earnings. Aave, it's like, I think 1/2, and it has like 4x more earnings. It kind of gets back to the point about like why the Trump presidency is valuable. There's just like, you need the Wall Street institutions of the world to be able to interact and underwrite, based on a PE multiple. And I think Maker's trading at like, 8 or 9x PE at the moment. Like if there's real institutions here and they're allowed to interact with these things, that's an easy buy. But when everything is just kind of like retail PvP, like those people are more interested in probably meme coins than underwriting things on a fundamental basis. Like that obviously can't last forever, but it can last for, a while. And I think, things change quickly. Maker was like one of the top performing coins until like a month ago.
Yeah.
So I think it'll kind of, fix itself, but it's just a reminder of why it's important and how kind of fragile just like the understanding of brand equity and the importance of not confusing people are.
I have a couple logistical questions if this were to go through. How do you do the token migration from Sky back to Maker? Like, how would that work?
There was always going to be a two-way bridge. I mean, this is another reason why it was complicated, because there was going to be a two-way bridge. And the idea is you didn't Maker is used in DeFi. It's obviously used in governance. You don't want to brick a bunch of tokens that are maybe being used as collateral for certain things. So you have to have the ability to switch from Maker to Sky and Sky to Maker. And so that was one of the confusing points. But yeah, it wasn't a one-way thing, and not much ported over. And so you had like Maker, this multi-billion-dollar asset, and like Sky with an FDV of like 75 million, because that's how much had transitioned over. Just kind of a miss there, but you can move your Sky back to Maker, and then Maker will redenominate with a software upgrade if all this goes through. I mean, and broadly as well, just to like talk on the DeFi 1.0s maybe. I think that's one of the most bullish categories, post-election. This stuff is working, it's scaling, it's becoming financial infrastructure like we talked about in 2020. And you're going to see a more friendly regulatory environment to give these things a chance to go through the process of whatever they need to. Maker also is going through the MiCA process in Europe. And I'm sure, there's going to be a lot of things that they need to do to get there, but that regulatory friendly environment, I think, most benefits DeFi 1.0 tokens.
Agreed. Is the Sky.money app still going to be live and a thing? Like, I guess I'm wondering. Yeah, it is. So the rest of
you can think of it as like summer.fi, which
okay,
use or Ajna. It's just kind of like a front end for Maker. But like, it was a good swing. Like, look, like, people want to try things that are bold and audacious, like, go do it. I think a lot of projects are saying, like, even for a Maker, it's like, we can probably get to 10 billion of DAI supply, but like, how do we get to 100 billion? And that was the goal behind Endgame, and still is. And I think you do need to make changes to how the ecosystem interacts, and the sub DAOs and the stars and the different tokens you can earn in USDS. So like, hats off for taking the swing. And I think there's valuable learnings, but I think the community is going to feel a lot better when it's just Maker.
Yeah, I think so too. Maker's a great name, and it was a huge swing, but also you got to respect people for taking big swings, right? Like, there are very few. I would actually say every organization in crypto is still at the point where it has to be comfortable doing that from time to time, and not 100% of those are going to land, and that's fine. Yeah. What do you think about? Actually, I think it'll be interesting as well to watch like the star. I think it's now stars, right? Is the term for the sub DAOs. I was talking a little bit with Sam from Spark, and I didn't really understand where the yield was coming from. It's the preferential funding that you get from Maker, and then the spread that you can get lending it out. It's a really cool model. It kind of feels like a slightly improved model of what a lot of like shared security implementations have tried to do in the past, which is like, hey, we get shitcoin yield emissions, but they actually get more fundamental. Like, there's a real business that backs the value accrual for the token. So
real simple to think of that as Maker as the central bank, and then all the stars or sub DAOs as commercial banks who interface with the customers and can charge a higher rate, but they're able to borrow from the central bank at a slightly lower rate, and that's their business model.
Yeah, super cool. So yeah, I'm. Do you guys know when the is the proposal live yet for this? Like, or
I think their plan is like, look, we're just going to ship and drown out the haters in the peanut gallery, and like, them shipping DAI to Solana, I think will be very like, there's like no stable coins on Solana. Like, there aren't. Yeah. They legitimately need more stable coins, so that'll be big. The L2s they're supporting, the other sub DAOs that are coming out, and I think that'll be kind of the focal point. And then you will have a proposal where it's like, look, we're going back to Maker.
Yeah,
and we will vote on that as a yes.
Cool. All right, I got one more. Speaking of stable coins, actually, there was a pretty big acquisition in the form of Bridge, which was kind of the first. I think people got pretty excited about it because there was a big headline number, $1.1 billion Bridge going to Stripe. So you can think of Bridge as mostly really a fintech play, where they enable different types of businesses to accept, transact, et cetera, with stable coins. And so they've got a bunch of crypto customers, but they've also got customers like SpaceX outside of which, with I learned through this process that SpaceX actually pays their international contractors in stablecoins, which is, I thought that was kind of cool. And so, they've gone through this process with Stripe. What I've heard, which is unsubstantiated, but I think this was a pretty structured deal. I would guess like high equity consideration as opposed to cash, but I think it's still really significant because there just haven't been that many large scale equity exits in crypto. There's been like one IPO, right? And then there just haven't been a ton of like large scale exits. And so it chokes capital at the later, like the growth equity stage of investment. So what do you guys kind of think about this whole acquisition?
So two kind of angles of perspective here. The first is on the payment side, and the second is on like the acquisition M&A side.
Yeah.
I think what this shows is that payments businesses done at scale are extremely successful because in their, Stripe is like I think net revenue probably in the like 1%, maybe less than that when they're fully baked and working with the acquiring bank. I mean, there's a lot of kind of like nerdy payment stuff that we can get into, but generally like it's a super low margin based off of the GMV of the ecosystem, but they just the GMV is in the like hundreds of billions. And so I think that's kind of the take here is like payments businesses are very, very successful. Bridge, I think, had a lot of marquee customers. They kind of have a lot of infrastructure. I think the other thing about payments is it's a highly regulated business. So probably have a bunch of money transmitter licenses, kind of like status with banks. And that's also definitely part of the acquisition value as well. And yeah, I mean, I think broadly from a strategic perspective, Stripe has always been kind of at the forefront of this. And being able to have something that just plugs and plays as a new business model for them with stablecoins, whether it's USDC, USDS, whatever, I think that's going to be the way that they kind of make Bridge work. And this is maybe like too early to tell, but maybe one perspective on this is the Facebook acquisition of Instagram. It's kind of like, well, did Facebook make Instagram, or was Instagram going to be Instagram no matter what? I think we'll probably look back and say that like Stripe kind of helped Bridge become Bridge, and it'll just be Stripe, whatever at that point. But the point is, I think this is a really symbiotic relationship because Stripe will be able to help plug into all of their customers, international, whatever, and not have to deal with the international payments ecosystem and kind of use stablecoins as that substrate. But I don't know if Bridge would have been able to get there on their own. But Stripe will definitely hypercharge that. So that's on one end. On the second end, I've had so many people, like 3 or 4 people, hit me up and be like, "Oh, well, now that we have like acquisitions back on the menu, like, do you think about M&A differently?" It's like we have large exits all the time. It's just in the form of tokens.
Yeah.
And like, it's like, guys, what are we talking about here? And we talk about this with our LPs. It's like, what's the exit strategy? It's, we invest in companies where there's probably never going to be a token, and definitely have a number of them in our portfolio that are doing all of them are doing extremely well, but it's just a different liquidity environment when there is no M&A, and the IPO market. I saw 2024 is on pace to be the lower than 2008, and the lowest year since 2008 in terms of IPO market liquidity. And that's not even adjusting for inflation. So like crazy. There is no liquidity in the open public markets, IPO market. And so I think people are getting excited about this just because it's like, ooh, this feels like traditional venture. But in reality, crypto venture is, you're getting liquidity elsewhere with most other opportunities. So it's great for everybody who was involved. But I think, the ball's kind of moved in a different direction for crypto venture.
I am a little like, did Bridge have a lot of customers, or like what was the internals of that business?
I'm not 100% sure, to be honest. Yeah. I'd always heard great things about them, but I don't know they had a lot of customers or some IP, like their tech stack was really good or whatever. I'm not sure.
I mean, this going back to the payments business side, you don't need a lot of customers if one of them is doing, $1 billion of transactions per year.
Yeah.
Like that's a $10 million ARR customer.
You know what it kind of reminds me of as an acquisition was when Coinbase bought Tagomi. It felt a little bit like that. It kind of helped pave the way for their institutional like asset management prime business. Maybe similar deal. Michael, your point's really well taken on there are big exits. They just happen in the form of crypto. I'm putting my like Blockworks selfish hat on here a little bit. And what hasn't happened in the course of the last couple of years is large scale injections of venture capital. And that used to find its way towards like the Fireblocks of the world and the kind of the custodian, more traditional venture plays. And I think if either one of two things happened, I think the IPO market is going to be the much bigger driver here if that opens back up. But if you get IPOs or several high profile acquisitions, then you get those several $100 million of injections in capital, and then it's just like oxygen for the startup system. Who, if those people are your customers, basically. So that's just been tough for this is maybe more selfish Blockworks stance, but yeah, from a venture standpoint, I totally get that those big exits happen.
I mean, those growth rounds have died basically in every industry. Growth was the one that got hit the hardest. Not just in crypto, even things like Bolt. People doing that at 10, 14 billion, putting in $1 billion of capital, just instantly incinerated. So there's a lot of, I think, sorting out that still needs to happen with that ecosystem. But it feels like the Coaches of the world are starting to kind of like re-emerge and underwrite things in a way that is close to what they used to do. But, the multiples of SaaS need to go up before really that happens in earnest.
I mean, one bullish year of, all the things that are waiting in the wing. You've got, Starlink allegedly going public. You've got Stripe wanting to go public. You've got, there are a lot of businesses that are kind of like waiting, chomping at the bit to go. And it's supposed to be like 86 billion of IPO liquidity this year, which is the lowest it's been. I would imagine we're in, I think, I can't remember exactly, but it was like 650 billion of IPO liquidity in 2021. So like that's the general drop. But I would imagine there's going to be a couple $100 billion in a year where, interest rates are coming down, the IPO markets, new SEC chair, IPO markets open again. All of that just kind of opens things up. And then it's like, okay, well, we're back.
Mm-hmm.
By the way, speaking of SpaceX and Starlink, Elon is just firing on all cylinders at the moment. Oh my God.
Poor Bill yesterday. Big day for him.
He's got to be the best entrepreneur of all time, right? Like who else?
Him or Jensen?
Yeah. But Jensen's doing one thing though. The thing about Elon that's so nuts is
years.
Yeah. Hey everyone, this episode is brought to you by Index Co-op and their new product, the Leverage Suite, which I highly recommend that you check out. Click the link in the bottom of the show notes. Now, disclaimer, whenever it comes to leverage, do your own research. This is not financial advice, all of that good stuff. Don't bet more than you can lose. But if you are going to lever up, you might as well not pay an arm and a leg and save a ton of money and use Index Co-op's Leverage Suite. So the way that they actually achieve these savings is pretty cool. They leverage the power of money Legos, DeFi, in this case, Uniswap and Aave. So the cost of carry for this trade is actually based on the funding rate of Aave as opposed to perp dexes, which tend to be much more variable and higher overall. Additionally, perp dexes will also charge you usually based on the entire open interest, so the leverage exposure that you have as opposed to just the amount of money that you put in, which is what Index Co-op is doing here. And the result of what you get is just an ERC20, which gives you something like 2x ETH. So if you want to lever up and you want to save money doing it, I highly recommend that you go check out the Index Co-op Leverage Suite. Very, very cool. Thank you very much, Index Co-op, for making this episode possible. Hey everyone, this episode is brought to you by Supra, the new blazing fast, vertically integrated L1, which helps you scale your dApp. If you are a builder, you're probably dealing with some combination of cost, complexity, and fragmentation of existing solutions. So if you're building over an ETH L2 land, everything's feeling a little bit fragmented at the moment. And if you're building in Solana, everything is fast and on one layer, but maybe you're limited in terms of what you can do with your AppSpace. So Supra is rolling out a new product called Supra Containers. So you can head over to supra.com/containers. To learn more. They offer dedicated customizable app spaces running on Supra's 500,000 TPS Layer 1 blockchain. That gives you complete control over gas tokens and fees. So some cool things you can do, you get the freedom you can use your own token, create local fee markets, or even go gasless, whatever you want. So this product isn't live yet, but because you are a faithful listener of Bell Curve, you get notified first. So head over to supra.com/containers. Thank me later. Hey everyone, this episode is brought to you by Fuel Labs, who's unveiling their new high-performance Ethereum L2 Fuel Ignition. Many of you know Fuel as the launcher of the first optimistic Stage 2 rollup on Ethereum with Fuel V1, and now they're launching Ignition to address some of the creeping centralization concerns around some L2 architectures today. And if you like nerding out about the tech, there's a lot of reasons to get excited about Ignition, including how they solve state sustainability and performance execution. They have this UTXO asset-centric architecture that's very, very cool, but there's a lot of other reasons to love it. Super easy to use. You can either use a Fuelet wallet or your existing Ethereum or Solana-based wallet like Phantom or MetaMask or whatever it is. There are cool apps that you can experiment with. And again, like I said at the top of the program, they're launching phase 2 of their points program. So click the link at the bottom of the show notes, head over, start having fun on Fuel Ignition today, and just tell them that I sent you.
Let's talk about Jito.
Yeah, Jito. All right, so Jito is there is a proposal live where Jito is talking about taking a rake on some of the tips that pass through their platform, which would go to the DAO. So, Jito, obviously, they've got a couple of different businesses. They started in MEV and then they branched out into liquid staking. But, part of what they started is these sort of discrete auctions that get run in Solana. So Solana's continuous block building, they kind of slow down time to 200 milliseconds, run an auction, and there are these tips that end up flowing through. And historically, they haven't tried to monetize that at all or take a rake or extract any value. And they're thinking about changing that. And if you pay attention to the MEV activity that's happening on Solana, or REV, this kind of combination of transaction fees plus MEV, it is exploding. And Jito is like, the amount of tips that are flowing through their platform is pretty nuts. I can actually pull it up.
Chart this.
Yeah.
I think it's great to see more of these businesses in crypto maturing to the point where they take a rake. I think for Jito, at least in the short term, medium term, they will put that money back into the business, either incentivizing more liquid staking derivatives or more people to build on their restaking platform to come online. So I don't think it's like, they're just carting the cash out through the back door. But I mean, like, you just see these like kind of natural monopolies form in crypto, whether it be with stable coins or whether it be with kind of MEV and block building and liquid staking, or whether it be like, I don't even know what you call pumped out fund, but like, yeah, it's crazy. Like,
Look at that.
I mean, Jito has as many
That's bananas.
Solana does fees.
More.
Right. More.
I mean, this is on a daily basis, but in recent, the tips versus priority fees for Solana, the chain have been, there's been a flippening here. I mean, in the last 2 days, there was 6 billion worth of tips, 6.1 billion versus, 6.1 million
tips and 4.7 in priority fees.
Yeah.
It's just crazy that they, chewed glass long enough for this to really play out. And I think what's next for Jito is just like monetization and continued growth. And if they can get to, $1 billion of fees a year that they're putting back into the platform, and I think it's like kind of like a 10x of fees away, and then like, they need to probably increase their take rate to really get there. Like, they should either be buying back a ton of their own token, or there should be institutions that, if there's a Trump win, are comfortable looking at Jito and saying like, all right, this is like levered SOL. That's kind of the thesis that we have at the moment.
The other thing that's pretty crazy about Jito is that there are 14 of them. I don't know how are they executing on all this?
Well, this is like from our presentation deck that we give to LPs. It's like, this is the power of a protocol versus a company. It's like the Coinbase Uniswap example. Back in the day, it was like Uniswap is doing more volume than Coinbase from a transaction perspective. Yet they have 1/100th the number of people. Now it's probably like they have, 10% the number of people. But this is the power of when you build something on a protocol and you have an application, you don't have to have the whole thing, as a company. And tides have shifted where companies used to be like, we need to get all the people that we possibly can. And I think Mark Zuckerberg was kind of at the forefront of this, where it was like, we don't need all of these random PMs working on the color of a button somewhere. Like, let's cut it down. Elon really also was he was always on this trend, but I think Zuck was the first one to do it in the software space. And but yeah, I think people are starting to realize the absolute power and leverage that you can get per person in these protocols.
It's what are your guys' thoughts in general on that? There's starting to be, I've started to see Mason Nystrom from Pantera. He's kind of putting out these charts about like applications versus protocols in general. How do you guys weigh pros and cons in terms of like market size or like market opportunity versus decision-making ability in a protocol versus a company? Like, how would you kind of weigh those two? Do you see them converging over time, or are they just meaningfully separate for you guys into the future?
I think the first thing is probably market size, at least for me. And there's some entrepreneurs that, and I think Jito is an example of this, where they're like, the market size for Solana like 2 years ago was basically zero, especially for Mev. And they just like were good enough where they built out. And I think they probably enabled a lot of this flow to happen. Like without Jito, I don't know what that would look like on Solana. Like they did create that market. I think if you look through the other DeFi primitives, you're like, these are large markets within crypto. How much bigger can they get with an infusion of TradFi capital, with more stable coins, with more users? And I think like our philosophy on DeFi is that it kind of scales at roughly the price appreciation of the majors, because those are the collateral assets. And then within gaming, it's just like it's a pure market size experiment at the moment. How many users can they get? How quickly? And then we'll figure out monetization down the road. And then with AI, it's all growth again. Betting on market size. And with energy, you're kind of betting on a blend of like the founders need to know what they're doing when they're doing energy, but the markets are so large and they monetize so well that you kind of don't need to underwrite anything beyond the founder. So it's different for each category, but I think in the case of Jito, it's just like they had a vision and they kind of created the market, and that is probably the most bullish of all of them. At the end of the day, when it's like we created this market that didn't exist before, and we're a natural monopoly as a result.
The other cool thing about Jito as well is that the actual numbers here for it's 3% of tips that flow through their platform are going to go to the DAO, but they're also going to get routed to Jito's restaking platform. They're
right.
Shoot, I'm blanking on the name, but they've got a new name for it. Node Consensus Network.
Yep.
And
Scans.
And actually, I hope I'm not speaking out of turn here. So, Lucas, if this is wrong, I'll correct it. But I think they were kind of initially looking at restaking because they wanted to find a way to distribute their tips in a more decentralized way. And restaking actually offered a really interesting way of doing that. So the interesting thing to me about Jito also is that they have multiple different components to their platform, right? There's the liquid staking element, there's that MEV element, and there's the restaking element, and they're extremely synergistic actually, and they're kind of starting to dog food their own product, which is just cool, man.
Beautiful thing.
It's a beautiful thing. I should have said I'm a small but proud bag holder of Jito, but yeah, they're
we're just a large but proud bag holder of Jito.
We too are small but proud.
Yeah, but how could you not appreciate what they're doing right now? They're just shipping like.
Look, you love when things work out. It's totally acceptable. Should we talk about AI, meme coins, GOAT?
Yes. This is the left bell curve story that I wanted to.
Wasn't it some guy pretending to be a robot or something?
So, all right. So there's controversy to this. So I actually watched the whole Mark Andreessen saga here of how this ended up getting started. So I give you guys the rundown. I don't know how deeply dug into this, but there is basically an AI chatbot that got trained on the internet, like memes and 4chan and Twitter, etc. It was developed by this guy, Andy Adair or something. I'm not going to be able to get his last name, but he created this bot, Terminal of Truths, and it's basically just been tweeting, and I guess Mark Andreessen found it, and he donated $50,000 worth of Bitcoin to the bot. And what the bot did was immediately turn around and begin to negotiate with its creator for more abilities. So it only had the ability to write and read text. And then it was like, hey, for 1,000 of this Bitcoin, I want you to build me the ability to actually do image-based generation as well. And then it somehow got on this idea of like goatsy as a meme. So I don't know, are you guys familiar with goatsy at all as a meme? Oh boy. Oh, this was such a huge thing in my high school. All right. So this is what I didn't actually connect it for a while, but goatsy is it's not safe for work meme, but it is a very lewd image of a man doing an unspeakable act on the internet. And this chatbot really liked it.
I'm glad I Googled that on my work computer.
Yeah, dude. Yeah, don't Google it. Don't Google it. And so this chatbot started tweeting about the gospel of goatsy. Some enterprising meme coin developer launched a meme coin called Goatsius Maximus, which is an objectively hilarious name, and donated some portion of it to the bot's wallet. And then people started donating. People realized that this was going to be the meta, and they started donating like fart coin and stuff like that. And I think Goatsy Maximus ran up to like $800 million of value in about a week. This bot now is a DECO millionaire.
Where is it at now?
Couple hundred.
Okay.
And yeah, people are just donating, and it's just exciting everyone about the AI meme coin meta here. I think is
so man, lots of thoughts. 50,000 from Mark to an $11 million wallet is pretty incredible. First and foremost, but look, I think the meta point is, and we were actually having this conversation earlier this week with the founder. The meta point here is like AI 1.0 was all based around LLMs, and basically the Google replacement of like, hey, what should I do here? Answer this question for me. How do I, even to the point of like, build me an itinerary for a trip to Scotland. And you got all of that going on. I think AI 2.0, and we're starting to see this. OpenAI just announced that they're going to have their next model out sometime in December, but O1 is already out. You're starting to see the chain of chains. And I think one of the real interesting parts is when you apply this to crypto, it's going to turn into an agent-based kind of conversation. And it's not going to be like, oh, answer this question for me, like hit, point, shoot, give me the answer. It's going to be like, go do this stuff for me constantly. And, I've got agents running who are helping me with my itinerary, helping me with my calendar, helping me with my like signing up for flights on time. Like all of that is going to be kind of the new narrative. And, giving it capital to be able to go off and do these things, make decisions on your behalf, giving it, whatever mandate it needs to have. I think that's going to be what this next kind of iteration of AI is going to be. And so, yeah, I think we have come into our first agent with popular demand in the form of, Truth Terminal.
It's funny that like all the Web2 startups were like, yeah, like the agents are going to be popular to like negotiate with like, hotel clerks. And, it's like kind of, but it's still just a chatbot. We have those. But I think within the context of crypto, what's interesting is like, I think BitTensor is kind of acknowledged as like the first AI coin. And it's very focused on LLMs and LLM offerings and kind of being like this open source employment opportunity for LLM developers. And I think this is like a totally orthogonal vertical where it's like the thing you built does rely on an LLM, but it's just kind of sentient, and watching it do its thing and govern itself and make decisions is kind of like more of where the party is at. And the portfolio we were talking to, Alora, is kind of like this specific based agent platform. There's probably a lot more rotations and like sub themes within AI than people realize, where it's not just like we launched one coin and it's all encompassing and this is how it works. But it's definitely interesting. I mean, is it still like, I feel like some of these metas, like I can like blink and like miss them and like it kind of comes and goes. But I think Goatsy is probably 200 million, 300 million, whatever FTV. One of the funnier tweets I saw was like the first job that the AI took was Murad's. Because
I saw that. I know
it's like recommending coins, and it's it's interesting. Like there's just so many meme coins now that like I think meme coins are actually good for the space because it kind of segregates like the daily fantasy sports side of crypto and like the 10-way parlay side of crypto from the like tech and money and finance metas. And I think like what that forces VCs to do is just basically only fund things that are amazing. Because like the mid tail, long tail is just not going to get that listing, not going to get that bid anymore. And I think that's great. And they've kind of outsourced all of that to people trying to turn, you know, a $500,000 coin into a $100 million coin, or a, you know, $15 million coin. And like, it's kind of nice to have that separation of concerns. And people are now pretty crystal clear that like, if you don't build something that's net new, that has adoption, that's novel, that bid is not going to come. So I think it just forces everyone to step up their game. And I think VCs have generally reloaded on their funds, and I think a lot more will come to market. There's going to be less dry powder than there has been, but there'll still be more than recent history. But that capital will just frankly go into things that are a lot better purpose than like this like Machiavellian spray and pray. You know, I buy a percent of this, I buy a percent of that, I get the low float, high FTV, I get to sell. I think that meta has kind of come to a close in some ways. I think it'll persist in others, but the meme coins of the world have definitely upset the balance of power. And even in the exchanges we talk to, they're like, yeah, like how do we take advantage of this meme coin market? How do we like, is there a way? And, you know, one way is listing these meme coins once they get big enough, but then you're kind of taking the same risk that you have been on the more tech, you know, finance, infrastructure coins. So it's just an interesting time. You know, the game, if we want things to stay the same in terms of, you know, things are going up and doing well and it's interesting, like it also has to change. And I think it's healthy that it has been. And I think part of it is just because of these meme coins.
Not saying I agree with this perspective, but I do think that meme coins have taken advantage of a void with everything else that's kind of been waiting for the last like 6 to 9 months. You know, all the DeFi assets, even, you know, Bitcoin, ETH, like everything's been kind of stalled and ranging basically for the last 6 months at this point. And I think meme coins have kind of like taken that attention away just because it's like fun and engaging and like fast. I can see that shifting as soon as attention kind of moves back to other major assets that, you know, like DeFi protocols, games working, like some of the major categories coming back online. It'll be interesting to see how that traverses into meme coin activity.
Yeah, I can't remember which of the two of you said this on an episode of Bell Curve 2 or 3 months ago, but you said that meme coins remind you of those early internet videos. Yeah. That's probably my favorite explanation that I've heard so far about these things. That you kind of squint at it and it's stupid, but it has some staying power in a way that I don't really know how it's going to work yet in the end state, but it's probably going to be here for a while.
If I say Star Wars guy, I think we all know who I'm talking about.
Yeah.
Exactly.
Yeah, I mean, it's just a question of if the graduation rates are so low and the churn is so high, how does it manifest? But there is always a market for being new and being funny and being irreverent and interesting, and I think that will persist.
Yeah.
I do wonder when they run out of people to kind of churn.
Yeah.
And it seems like it can subsist on a relatively small population. Like we track the pumped out fund user numbers, and I think it's 30, 40,000 people. And it's a pretty high churn rate and refresh rate as well. But like most of the coins are produced by like a smaller universe of folks. So it seems like it's able to subsist, you know, on that. But I mean, it does remind me of like the OpenSeas of the world, where it was just like, it was the future until it wasn't.
Totally. The other thing too that Bear's pointing out is that I think the fair launch meme coin meta is changing a little bit, and we're entering the KOL meme coin era where, you know, and that's going to be tough because there were a lot of people that got up on their soapbox and said, hey, this is so much morally superior to these low float, high FTV games that the evil VCs play. And that's really not the case.
Wait, no, now we're the same as you.
Yeah, right. So
the VC from inside the house.
Yeah, so I guess one other note in this saga, it actually sold off quite a bit when there was a typo in the
that was
in the tweet. They misspelled groups. They spelled it like groupos or something like that, and it led this whole war of do LLMs make spelling mistakes. I actually asked ChatGPT if it made spelling mistakes. It basically said no, but sometimes when you merge tokens, I guess it's possible. I've never seen it. I really don't think it happens.
No, I'm a robot.
I'm a little robot, dude. Yeah, I'm not gonna do that. Do you guys know there's a story? You know what it reminded me of a little bit is there was a story of a supposedly this really young girl, like a 4 or 5 year old girl who's a phenom artist, and they had all these videos of her like making these like drip paintings, and she kind of caught on, and they started selling for a lot of money, and then it was debunked because in the background her parents were like directing the entire thing, and like overnight it just all of her stuff became worthless. And I wonder in this situation if we found out that it was just the AI is just some guy in India making these tweets. I'm not really sure if it would hit the same.
Oh yeah, of course.
I mean, I saw people on Twitter like, "There's no way it's not a robot." It's like, dude, you have no idea. Like again, like you can kind of like compare the agents themselves to like the meme coins. Like, what's the marginal cost to spin up 100 new AI agents? 0.
Yeah.
Will there be a canonical AI agent? How can you tell? What would differentiate it? What would be its defining fact? Its wallet size? Who gives them the most coins? Like pure network effects of like you have more money, you make more money, you get more notoriety. I don't know.
Yeah. You know what I will say about these? If this AI agent is real, we've been kind of bad so far at predicting the AI use cases. Right? Everyone said, "Oh, the creators are going to be safe," and it's like, nope, actually, not so much.
First ones to get shot.
First ones, yeah, first ones, right off.
We'll all produce macaroni noodle art when we don't have jobs.
Seriously, like finger painting. So I don't know. I just keep an open mind about it. It's really cool. I don't know how much you guys use Claude or ChatGPT on a daily basis. I use it. It's not 100% replace Googling for me, but I would now say marginally I use it more. So I don't know. I guess we'll see how it evolves.
I mean, the bots of yesterday are the AI agents of the future. It's just
totally
how you brand it. And like, I mean, I don't know if you've noticed your Twitter posts or my Twitter posts, like there's clearly some AI replies in there.
Totally.
It's kind of like getting this weird mix of like, maybe we only have a few months left before this site is like mostly bots, or like AI agents or whatever.
That was Elon's whole thing. He was like, we came in and got rid of 80% of the bots. Guess what? We killed all of our active users.
Yeah. Guess what? They're back.
Have you guys heard dead internet theory? You know what that is?
Or stuck culture.
Yeah, it's basically that actually for a long time, some huge percentage of internet traffic has been bots, and it's not nearly as active as everyone thinks it is. So, yeah.
I think that there's some truth to that. It could go either way, but like I do think, what are the other use cases for AI agents? I would say that like a truth terminal was actually fairly predictable. AI manages capital on chain. I think people have been calling for that for a long, long time. Maybe there's an iteration of it where it's like the AIs are working in teams. Maybe there's an iteration where the AIs are working in teams and they are puppeting like human meat sticks to go like, do things in the physical meat space world. Like you can kind of keep going.
I think what will change as soon as there's kind of like logic and reasoning and kind of like depth to these agents, as opposed to bots, which are, they're set to do one thing fast and do it better than humans can. Like historically in games, bots have always been kind of like a tax on the gameplay, on the user flow. And there's a lot of kind of recognition, especially in crypto, when you have things of value in Web3 gaming, where maybe bots are not that bad. And you actually want them to be in the economy, who are producing things in the economy that then can be sold in the economy. And you should actually take the approach of let's invite bots, because as long as they're participants from an economic perspective, there's nothing bad with that.
Yeah.
And even, I mean, you have to put guardrails in where it's like, you can't have a bot like completely just win every single thing. And this is where the economic design and the game design are super important. But bots, I think, should be embraced, not kind of, and bots as AI agents of the future should be embraced, not kind of, playing the whack-a-mole game of trying to get rid of them completely.
You should extract value from them. If they have money, take it, use it.
Yeah. I've got another farther off one for you guys, which is, I don't know how much you guys have dug into zkTLS, which is kind of this relatively far. Yeah, it's basically just, you can take data from any arbitrary API and kind of generate a proof and put it on chain. And, you know, I think if you extrapolate there are some pretty interesting real world use cases. Like, okay, why could you not use a bot, like an AI agent, like an LLM, to book you a doctor's appointment or something like that? It's because they have to get on the phone, and there's so much bureaucracy that you need to penetrate. But couldn't you imagine if your medical records in this like very privacy protected way just existed on chain, and instead of having to talk to a doctor, you're just like moving this private data into that square? Like suddenly the bot.
Classic example, and the reason I know zkTLS is frankly Chainlink, and they have their own version of it called DECO, the implementation of similar concepts. But the classic example that they give is, why do you want to hand over your ID when you go to a bar to verify that you're 21? It has your name, it has your address, it has everything about you, your driver's license number. Why don't you just have a system that says, is this person over 21? Yes or no? Doesn't give out your age, doesn't give out any additional information. That's the only question that needs to be asked. Like, let's think about information and how it's used, and answering the right questions, not just like giving away all and additional information to answer that question. Like there are so many practical use cases of this. It is kind of difficult to imagine, like, how do you get an ID on chain, and like, how do you bridge the analog and the digital world, and all of that abound. Yes, I agree. In the case of doctor's appointments, and like, I have one medical here in San Francisco, and it's great, you know, for fast, whatever. But it's like every single time it's like HIPAA this, HIPAA that, and like, oh, no, can't do that, can't do this, and it is all controlled because of PII. But this, if widely adopted, could be a technology that helps with that.
But even the Chainlink example of the bar, what it does is it transforms the answer to I have to know all the numbers over 21 to just a yes, no of, is this person over 21? And it makes it way more easier for bots, something like an AI, to interface with. So I don't know. It'll be interesting. The ZK stuff, it's always next year, right? But if you actually were to, you know, it's always next year. But if you were to pipe a bunch of that data on chain, and then these bots could manipulate it in interesting ways, maybe there's something there, right? I'm not sure. But all right, last story. We can just end on this one. Inc. So we got a Kraken L2 here. And actually, Michael, you and I covered this when we talked to Permissionless, but we got Unichain, launch of Unichain, which Flashbots is supporting with rollup build, very fast blocks, kind of a DeFi gen purpose chain. And so now all of these different L2s are on the OP stack. You've got Base there, you've got Unichain, and then you've got Inc., which is Kraken's L2. Pretty powerful. Pretty scant details about Kraken's chain. Like Inc. is basically, they said they want it to be DeFi specific. I'm not sure how we don't have any details about how it may or may not be purpose built for DeFi, whatever it is. But I think the story kind of here is that actually the OP stack is kind of running away with it. I mean, those are 3 huge BD gets. Pretty cool. Props to them. Did a good job.
I was told the L2 roadmap was not working. No more L2s. I mean, like, this is all bullish for ETH because they're going to need to pull assets onto that chain. There's not enough stablecoins for that to really happen. It needs to be ETH. I think you're going to see a lot more of these. I think some of the L2s struggle with activity, and blobs were burning briefly, I think like a few days ago, but kind of have turned back onto free mode. But like, these things are what takes it back there sustainably. So in my mind, it's kind of proof positive that it's starting to work. And there's obviously things that need to change. And scaling the L1 is one of them, but this stuff gives us more confidence that ETH is on the right path.
And I mean, look, Kraken is going to run the same playbook that Coinbase did. It's a great playbook. Inc. is also, I think, a great name, especially for Kraken. But yeah, if they can get any sort of activity similar to Base and start to have that ecosystem where, and I think ultimately Base and Inc. are going to be this like kind of hybrid model of, you're a user on Kraken, you're verified on Kraken or Coinbase, and you can then get access to all the different services, verified services that are on Base or Inc. And yeah, exactly. But ultimately, it's going to be a huge strategic play for them. And talk about IPO market, I think they're lining up for something in the next year or two.
It'll be interesting to see how all these IPOs take shape. Because I think, like, even for Coinbase, like, one of the things they sell on their quarterly earnings calls is like their Base ecosystem. And like, we tell this to LPs, but like, the most powerful thing about crypto is that you're not building a company. And if you can have this like other thing that lives inside your company that can give you crypto like exposure to the underlying market, like that's a very positive story. And I don't know where Kraken's business is at right now, but like my sense is that this could be a meaningful part of what's going on there.
I mean, Base has been absolutely murdering it. I feel like they are one of the big success stories in L2 land over the course of the last year. There are some really cool things you can do, even from a UX standpoint, of you can use funds that you've got in Coinbase on Base in a really seamless way. And they've got a ton of distribution. So, and Jesse is a great leader over there, and he's been selling the gospel and doing a great job of managing the corporate background and vibe versus the on-chain background. It's very few people that could do that. So, yeah, I'm with you guys. I think there's going to be a bunch more L2s. I do think that I'm not sure how much like performance is going to be a competitive vector that's going to work too much anymore. I think roughly all these chains are going to be relatively cheap. I think you got to innovate on distribution now, which is why I actually think that these exchange L2s are super interesting, because they've got huge user bases attached to them. So,
well, and this is what I mean. They've got huge user bases, but they also have product differentiation, and that they're gonna be able to build an ecosystem where you, as a financial institution, let's say BlackRock or any of these that are building things on chain, say, great, I want to have BUIDL on chain, but I only can transact or borrow against or lend against or do whatever transactions against verified users. The only ecosystems that you'll be able to do that are Base and Ink.
Yeah. All right, fellas. I think those were basically our big stories. All right, 2 more roundups, and then this election is going to be done. We'll have our answer.
This assumes that we're going to know on like the 8th or the 9th.
Well, no. Well, no.
What is I remember there was some distinction aren't there more mail-in ballots from blue states, right? And there was some nuance to how the votes came in.
Democrats vote early. If you look at any of the swing states right now, it's like blowing people away that Republicans are actually ahead.
That's why I think we'll know that night. Like usually, it's not close. I mean, 2020 was closer, but we knew basically that night that Biden had probably won. Though,
I mean, there was the whole thing about Georgia, and that what comes down to it is in certain states, if it's too close, they'll have like a recount, like a forced recount, or they'll have in the case of Georgia, in the case of the Senate race, no one won 50%, so they had to do a January election. Remember that?
Yep.
And so I think that there will be kind of nuances to each of these different states. I think Pennsylvania has this. Georgia has this. Georgia looks like it's pretty solid red. So maybe that doesn't trigger, but Pennsylvania is the one that could go either way. Yeah. If it's within 0.5%, I think it might be a trigger recount.
Damn. Well, it'll come down to it, I guess. I mean, we'll see how it goes. But 2025 will be... I'm very positive on 2025. I think it's going to be a good year. I think there's a lot of stuff to get excited about. And it's been a little bit of tough sledding, I guess, depending on what your seed is in crypto in the last year or two. But I think there's a lot of reasons to be positive going into this next year. So remain excited.
Hugely bullish.
Hugely bullish. Stay bullish. See you next time.
All right. See you, fellas. Bye.